Okay, traders, welcome to today's webinar event. Well, we got a full house in here today, traders, and I'm really happy to be putting on this event with all of you guys as valued customers and as future customers of our products and services. First and foremost, my name is Sean Kozak. I'm the Director of Business Development with Shark Indicators, and I'm also a futures trader of over 8 years. I have the privilege of actually having Zach White, our product specialist, who's going to be helping me with today's event during the demonstration. And to let you guys all know in advance, we are recording this webinar in case some of you have to dip out early, or if for whatever reason you have any type of issue with technical difficulties, internet connection, and so forth. We will be sending out a link so that way you guys will get access to that recording after the event. Please feel free to type your questions in the chat box, as we will be able to address those towards the end of the presentation. That way we can focus on the topics at hand first before we actually get into the Q&A session. Right, so this webinar has been long overdue. We've been putting this together for some time, and the reason why we wanted to basically make sure that we had everything in alliance before we put on the event was because rather than just show you guys our new product, which is the SiBacktestLineBreak bar, I actually wanted to spend some time as a trader and build actually some example strategies that can be utilized with this bar type so that you guys can actually see the benefit in using a new product such as this. Right, so it's essentially today's event is where we're going to look at how you guys can actually gain an edge using a different type of bar type for your trading. Now the question becomes is, why is this even important for us to even be wanting to implement, right? Why use a different bar type? Why use a different way to look at market data, right? Well, the question is, it's really about market data, right? Because as technical traders, we essentially are going to be looking at charts, right, for use of information, right? We're going to be looking at market fractals, market data, depending on if you use tick-based charts, time-based charts, Renkos, any other type of chart type that you can imagine out there, range, right? All those charts are doing is they're breaking down market data. And this is how we as traders interpret the market information, right, as price action goes up and down in the market. Right, so one of the reasons why we created this product was so that it can be back tested effectively, right? Because what is the use of using a product for building strategies if we're not able to actively test it effectively with a degree of accuracy, right? Because we can test a lot of strategies and we can test a lot of approaches into making money in the financial markets. But really the end result is Shark Indicators, and our whole model with products and services is to be able to build and test your strategies before ever trading capital in the market. And this is one of the reasons why Zach actually put some time together and actually created a very, in my opinion, one of the best bar types I've ever seen to hit the market with regards to being able to test it effectively. Simple, right, but more effective, right? So TJ, we'll get into the questions later on when Zach is in here, as well as at the end of the time for some Q&A. Okay, so first and foremost, quick disclaimer, Shark Indicators, right? We have no financial interest in the outcome of your trades. So if you are going to be trading, you want to make sure that you have risk tolerance to do so. Also, any of the results or any of the back tests or any of the information that we explain in today's webinar event with regards to strategy examples, it's for educational purposes only, right? So past performance is not indicative of future results, right? So we know that that has to be said before carrying on. Now, let's get into the event agenda, because today I want to be able to make this short and sweet and to the point. I don't want to spend a lot of time going through a bunch of slides. I want to get into the charts and explain some of the features. Zach's going to come in and actually do a quick demonstration, and then I'm going to go and spend the remainder of the event going over a demonstration with regards to the strategy templates for BloodHound. So the first thing I want to discuss is the features of the SiBacktestLineBreak bar. Right? Once I go over the features and how you guys can use the adjustable criteria for this bar type, then I'd like to actually go into a product demo insight. And what I mean by this is I've actually built a master BloodHound template that has 3 logic templates built inside of it for example strategies when implementing this bar type. Now there's a whole lot of other ways you could use this bar type for trading. I just wanted to be able to show you the 3 most effective ways that I could see just jump right out of the charts at me as soon as I applied these to our trading charts. And I looked at different markets. I looked at crude. I looked at the NASDAQ. I looked at the Russell. I looked at the FDAX. I looked at some of the major, more volatile instruments. I looked at the ES and so forth. And basically, when I look at a chart as a trader, I look immediately for repetitive patterns, because repetitive patterns are essentially what makes trading more longer term, I guess you would say. And what I mean by longer term is it makes it more effective for us to be able to find a strategy around pattern recognition, right? Because if something that you're trying to do is not repeating itself over and over and over again, then there should be no expectation of being able to use it from a trading strategy perspective, right? So this BloodHound template that I've created are basically hinged around what jumps out at me as a trader for simplicity and for trading. And you guys can basically do a whole lot more with it, and we'll explain that as we go into the charts. But I thought it'd be more beneficial to be able to point out the 3 most simplest but most effective, and then I'm also going to be showing you a back tester on one of those as well, right? When we go into the live demo, what I'd like to do is I'm going to ask Zach to come in, and he's going to spend a few minutes comparing the backtest line break bar versus the standard line break bar that is available inside a NinjaTrader or maybe other platforms. And is everybody else hear me okay? We've got a couple people saying no audio. If you guys can hear me okay, just type a Y in the chat box. If you're having audio issues, you might need to log back in and log back out. Can you guys hear me okay? Everybody's got a good connection? Okay, perfect. Okay, let me just turn my mic up here just a bit here, guys. Let's do that. How's that sound? A little bit better? Excellent. Okay, guys, so with this in mind, let's get right into the first concept about looking at charts. And this is going to be very simple, guys. In my opinion, if trading is not simplified, then sometimes as traders we can overcomplicate things, right? So when we look at using a bar type, as I mentioned, it's really about how we just look at the market data. We could use Renko charts, we could use time, we could use tick, volume, range, you name it. But at the end of the day, isn't it just the same as just looking at the market from a different lens, right? Now, could you guys do me a favor and just type in the chat box the primary chart types that you guys are actually trading off, whether it's not the time frames, the bar types. Are you using time-based charts, range, tick, Renko? I'd like to know, just based off the audience, the type of charts you guys are actually looking at trading, okay? We've got a lot of mix, right? We've got a lot of different traders in here. That's great, right? So one of the things about understanding bar types is whether or not it's removing market data, right? Now we've got a lot of traders in here. They say they use Renko charts, right? They're very viable for building systems. But one of the problems with using custom bar types is that they hide market data. So when you go to backtest those types of bar types, it can be very ineffective because a lot of times the data is being skewed, which is one of the reasons why we created the SI backtest bar, right? The backtest Renko bar, right? But what we wanted to do with the line break is to be able to create the same example so that if you guys are going to build a system and strategy off this bar type, right, then essentially what you're able to do is you can backtest with accuracy. Now, when we look at charts, isn't it safe to say that when we look at standard chart types like a time-based chart or a tick-based chart, right, isn't it kind of whippy? Have you guys ever noticed that it's just very random? Does anybody else here agree with that, where long wicks and no real directional bias easily identified? A lot of times it's very unpredictable because you could just have random transactions that print a bar or random time that just prints a bar. And it's not that you can't trade effectively off these time frames, because as a trader, I've been around for a while. I know a lot of traders that trade effectively off tick charts and time charts and volume charts and so forth. But my perception of this information is a lot of times it can be very hard to read. And when something's very hard to read, it becomes noisy. And it even forces us to make unjust trading decisions, because a lot of times if our analysis is skewed in an unhealthy way, then it makes it harder for us to actually make sense of the information that we're trying to trade. Now that's a very basic way for us to look at market data, because essentially, if you think about it, all a chart type is doing is it's just giving us market data of the relationship between 4 variables: the open, the close, the high, and the low price range, right? 99% of all chart types are looking, right, at this type of data, with the exception of some other custom types like order flow information and so forth, right? Because you can code other bar types around that type of stuff. But if you're taking the 99% of most traders out here that are looking at market information, isn't it more effective to remove noise as best as possible? Wouldn't you say it would be easier for you guys to get better at trading if we can reduce noise? That's one of the reasons why a lot of you guys trade with custom Renko charts. That's one of the reasons why a lot of you guys in here own our custom Renko bars, right? Is because they remove market noise. Well, this is exactly what the backtest line break does. One of the reasons why this is able to clean noise so effectively is because we're clearly able to see directional bias with these bar types. Now, one of the reasons why I like this bar type over other types of bar types that clean market noise is that it isn't removing valuable market data. Now, some traders might say, well, that's not really important to me. As an experienced trader that builds and tests systems for a living, right, I would argue differently. Right? I think knowing the true open, the close, the high and the low of a price range without removing that market data is very, very important, especially when you're going to test strategies with accuracy. Does anybody here agree with that? Anybody here who's been building systems for a while, does anybody here agree with the fact that if you're removing market data, you're taking information out of your system metrics that is needed for you to be able to be beneficial in understanding the metrics? Right, and I'm seeing a whole bunch of yeses, and definitely, exactly. Especially the way the NinjaTrader framework is designed, right? So for those of you that are looking at testing strategies, the way NinjaTrader is designed, we're only able to test on the bar close of a trading system, right? Therefore, if you're not getting the true open and the close of a price bar, then aren't you losing the ability to test your strategy properly, right? The answer is yes. So the line break bar, the SiBacktestLineBreak bar, cleans market noise without removing valuable price data. And in my opinion, this is very, very, very important, especially when formulating a trading decision, right? So some of you guys might be trend traders. One of the reasons this bar type is so powerful is because you're able to clean market noise. Now, some people are saying here, it looks like a standard candlestick. Well, the truth is that it can be applied to many different features, and I'm going to explain this in just a moment, Michael. So just bear with me, and I'll show you how it differs, okay? Now, a line break bar, you're able to identify clear reversals in market structure because the way this bar operates, the line break actually has to reverse and actually break the previous candles in order for you to be able to formulate the trend direction of the bars. Now, that's a very layman, simplified version of what the bar type can do, and Zach will give you a little bit more of an intro on that when we go into the demo. But it's very easy, right? Very easy for you to be able to see directional bias with just the bar type alone, without having to use a whole bunch of indicators to formulate trading decisions. Is anybody in here price action traders, where they look at the highs and the lows of price action to formulate trend direction? I'll give you guys a second here to look at. Do you guys look at higher highs and higher lows, market structure for pattern recognition, right? This is a pretty straightforward question. I would assume most of you guys are looking at this, right? I know I am, and this is very important because price is one of the most important constants of every market strategy because price is a constant, right? So if we have a bar type that can show us price structure without having to use a bunch of indicators, this is very, very important, right? So let's take a look at this. When we apply the SI backtest Renko bar, right? When we look at this, we have the ability to adjust custom settings based off of minute, second, volume, tick, day, week, month, year. We can apply the variable against any type of bar type that you want, right? Within reason to the framework of the bar type that's been coded. So as you can see here, here is a list: tick, volume, second, minute, day, week, month, and year. We're able to essentially apply the line break to any one of these base period types. So let's say you wanted to look at a volume chart. You can apply the line break, okay, to a volume chart and it basically replaces the functionality of that volume chart, but based off of how the line break operates, right? And you also have the ability to change the line break setting, which allows you to be able to come in and adjust how large you want that line break reversal bar to change. You also have the ability to look at the open percentage and change the parameters around the essential, the criteria of how these bars are populating on your chart based off whichever bar type you're applying this to, right? So we'll get into showing you the settings in just a moment. What I'd like to do is, what we'll do is we'll get Zach to demonstrate this when he compares it against the standard SI or the standard line break bar inside a NinjaTrader. But I want to give you an inside overview of this information so that essentially what we can do is we can show you the inside criteria of how to set these bars up, how to adjust them so that when you go to apply them or use them, you understand how to basically operate the tool, right? If you're having any issues with audio or visual, please just log back out and log back in because everybody else seems to have a clear connection, okay? So with that being said, when we look at using this bar type, there's nothing worse than just buying a tool and then essentially being told, here you go, guys, go and use it, figure it out on your own. I hate that. I can't stand that. As a trader, it's really about testing and forming ideas and being able to understand how to use the product. And if we can give you some type of information to help you better understand what we look at using this product for, then it might be able to aid in your development for how you choose to use the product. Now, there's a lot of experienced traders in here. We're fortunate to have a community of very experienced traders, right? And there's also a lot of new traders. So one of the nice things about what we're going to show you is we're going to show you the baseline ways you can use these bars through 3 example strategy templates. And then what I'm going to do is we're going to go into the demo so you can understand how these operate, right? So the first one I want to mention is a standard trend pullback system. There's nothing special about this other than the fact that it backtests really well, right? And the reason we know this, we're going to show you a backtest on this template because Zach and I created this based off some of the things that we were seeing. Now, this pullback entry template that we're going to show you is basically a passive strategy. And what I mean by passive is it basically takes less trades, but higher probability setups, right? Now, some of you that are looking to take 15, 20, 30 trades in a day, you would not be able to implement this template for your approach. You might have to use the bar type to go down in time frames to be able to get more setups using the template, right? But my job here as an educator and a demonstrator of this product is to show you how to effectively use this tool with less drawdown. So what I wanted to do is I wanted to build an example template that represents a high profit return with a small drawdown. Would you guys not to say that that would be more beneficial than the amount of trades that you take, right? Everybody's going to say yes because it's the most important aspect. Low drawdowns, more return, right? The next 2 templates, these were more from an interest on my standpoint. When I first loaded these bar types on my chart, I was talking to another experienced trader. He's a colleague of mine, and he was actually one of the bigger S&P traders in the world at one point. And we started looking at this, and I said, well, look at that pattern. Look at this pattern. Well, you can see those clearly. They're just jumping right out on the chart, right? And these are engulfing patterns. Now, these are not new patterns, but these are often overlooked by traders that try to overcomplicate things. And what I found when I put these bar types on the chart was that it really, really just stood out to me. So I said, these could easily be you could easily build an effective strategy with just this pattern alone, right? Adding it to whatever other systems you're trading, or at least being able to formulate maybe momentum and trend direction towards your entry decisions, right? So what I did was I created 2 engulfing templates. One of them is the standard true engulfing template, which is basically the body engulfing candle. But one of the things that I found about these bars is that it's more often that you would have a range engulfing pattern than a body engulfing pattern. And you're going to see why I actually prefer the range engulfing pattern over the body engulfing pattern here when we go into the demonstration, right? So these are the 3 templates that we actually provide with the SiBacktestLineBreak bar. The reason I decided to do this with our team was so that you guys actually have a leg to stand on when you use a product with a degree of accuracy. And this is one of the reasons why Daniel and I actually work on the templates with strategies for BloodHound, right? So we try to put in a lot more effort than just trying to show you a product once you install it and then you have no use for it. Okay, so let's go in here and take a look at the signals that the trend pullback logic actually creates. Now we have two choices with this template, or with any template that is. You can enter a bar close or you can enter it intra-bar. When you enter a bar close, you're waiting for the confirmation of the candle to do the exact formation of the pattern. Right, now you can see I've circled 2 short setups and 2 long setups. And I'm just using a standard 50 period EMA, right, on a faster intraday chart. Right, but these setups are very, very clean. You're going to see that there wasn't a lot of setups today, but there was one very clean setup on crude oil, and I'm going to show you that demonstration here in the demo today. Right, so we'll look at a live example of this setup today in the market. Right, but can you guys, is there any problem with seeing these setups here, guys? It's pretty clear, right? There's not a lot of trade signals, very clean, very easy to understand. We're waiting for price to pull back to an average, but there's a lot more going on into the template. We're using previous bar comparisons. We're looking at the certain tick proximity of the EMA. We're looking at a few other things that have to be lined up in order for us to get the signal. We've also excluded certain things. Yeah, we'll get into that, John. Yeah, we'll get into that, John. Yeah, we're going to answer some of those questions in the demo. Right, but I just want to show you the clarity of how clean these setups can be so you can see the potential in which we could use, right, these signals. Right, now the entry hinds can be in both places. You could enter at the pullback based off the settings of the system template, or you could enter at bar close, right? And it really just depends on how you choose to trade. I personally trade my systems intra-bar. A lot of traders trade them on bar close, right? The only way we're able to back test effectively using any type of strategy template is on bar close, because that's how NinjaTrader operates, right? So the example signals here, assume you got in on bar close, right? Let's just keep things simple, Heinz, and let's assume you got in at bar close. Okay, guys? So let's take a look at the next template. This is essentially the body engulfing template. And in order for the signal to take place, the body reversal candle has to engulf the previous candle's body. Now you can take a look at all 4 signals, both long and short, and the body engulfs the previous body's candle, or the previous candle's body, I should say. Right, now if you notice here, it would make more sense to apply a directional bias to this than rather just taking every engulfing pattern. And I'll explain that more when we get into the demonstration of the templates into the workspace. But for this template example, I want to show you that in order for us to get a signal, it's a very simple engulfing pattern, but the true engulfing pattern is when you have a body that engulfs the previous candle's body, okay, based off of a reversal bar. Now the last one, this is actually my favorite, with the exception of the trend pullback. The trend pullback and this one are my 2 favorites. This template is where we look at the range of the reversal bar, okay, based off the line break. And essentially the range of the reversal line break candle has to break the previous candle's range from the high to the low point. And this, to me, in my opinion, if I spent more time with this template, I know this pattern alone could create a very effective system. I know this because I can see the clarity of the signals. The only thing that needs to be considered when building a strategy using this logic template is making sure that you're using directional bias as your filter. You do not want to take an engulfing pattern signal against the trend. Unless you're a counter trend trader, then you would look at it differently, right? But from a trending and momentum standpoint, we would look to trade with the direction of the move, because the impulse would be more favorable for effectiveness, right? Now, does everybody understand the 3 different templates that I've explained? Very basic, very straightforward, right? We have a pullback template, we have a body engulfing template, and we have a range engulfing template. You will have far less signals with the body engulfing than you were with the range, but you will also have strong signals with the pullback, and we're going to demonstrate that here in just a moment. So what I'd like to do now is I'd like to take this time to pass it over to Zach. We're going to put him as the presenter, and he's going to spend a few minutes breaking down your questions on the true understanding of the mechanics behind the line break. He's going to show you the difference between the line break that we built as well as the standard line break that is offered inside a NinjaTrader. and he's going to answer a few technical questions as to what's formulating the line break when it's created based off of the reversal pattern, right? So what we'll do here, guys, is I'll pass it over to Zach, and then I'll come back and demonstrate the actual BloodHound strategy templates once he's finished.
Hey guys, all right, so hopefully you guys can see my screen. You should see two charts side by side there, one with the backtestable line break and the other one with the Ninja's standard line break. All right, so good. Looks like you guys can see it, so thanks. All right, so let me kind of give a brief overview of what the line break is here. So the white chart on the right here, this is NinjaTrader's standard line break bar, and the line break originally came from Japan, and it's another way of filtering out noise in the market. It's quite a bit different than a Renko, because as you can see, the size of the body changes all the time. It's different. Whereas in a Renko, the body size is fixed. Now, originally, from my understanding, this was originally called a 3-line break chart type. And essentially the way it functions is that in order to get a reversal bar, so let's, we'll pick on this red reversal bar down here. The way the 3-line break worked is price, well, okay, that's it. Let me back up here. So when the 3 green candles moving up, in order to create a reversal bar, price had to move past the lowest part of the bar. So in other words, price had to break, the bottom of this green bar, looking back 3 bars. And that's what allows a reversal bar to form. So we can see this red, the first reversal bar here, the bar closed lower than the low of those last 3 green bars. So whenever, so if I slide forward, this green bar here that reversed up, the price of this reversal bar had to break the highest of the last 3 bars in order to reverse up. So that's kind of a quick, summary of how a line break works. Now Ninja took the traditional 3-line break and just made it a line break, right? So one of the options in the line break is you can actually set, how many candles back, how many bars back does price have to break before a reversal bar can print? So this is actually adjustable, which kind of makes it unique for day trading. So, so now to kind of go into what's the difference between Ninja's line break and our new backtestable line break. So this arrow here, you can see this is the same arrow on both charts. So we can see in the chart, the gray chart on the left here, look at where the arrows are. So in the traditional Japanese line break, you can see that the open and the close of these bars always match each other exactly, right? So in that aspect, they're a little like the Renko, because the open and close from one bar to the next always match each other. But we know in real trading that never happens. So the open price of the line break is modified, and that's why it's not backtestable. So if you look at the gray chart here, you can see that the open and the close between the bars don't match each other all the time. And I pointed out, I used the arrow here to point out a bunch of bars to show the difference in the open price of the bars. So on the white chart, all these arrows are marking the open price, for the traditional line break. And then on the gray chart, it's showing you where the traditional line break open is, but on the gray chart that's showing you the back testable line break, you can see how much of a difference the real opening price is to where it's been modified, you know, using the traditional line break. So the key to getting as accurate back testing as possible within NinjaTrader, you really need to know where did the bar really open at. So whenever you start modifying the open price of a bar, then you really start deteriorating the backtesting results. So this backtestable line break now actually gets you a more accurate open price, you know, for better, more accurate backtesting. And you know, probably the most prominent area where it's obvious, where it's really easy to see where the the bar has been modified is, you know, on the white chart here. If you look at the arrow, right, the traditional line break, you know, the open price is way down here, but we can see that really on the back testable, the open price was really up here next to where the green bar had closed. So you know that price really, to open the next bar, price is really going to be closer to where the green bar closed. But you know, the way that the traditional line break works is that you actually modify the bar, modify the open to way down there. So that obviously that will skew your backtest results tremendously. So this is the easiest observation to make in the difference between the traditional line break versus the backtestable line break. All right. So with that, you know, I've got a couple of questions here I'd like to answer before I turn it back over to Sean. So let me pick out a couple of questions here. Okay, so the first one, TJ is asking, what makes a bar back testable? So I kind of alluded to the fact that what makes a bar back testable is having an accurate open price on the bar. That's what makes it accurate as possible on a static bar there. So whenever you're dealing with Renko bars, line break bars, and let's see, what else is there? Well, any other kind of custom bar type where the open price is modified, then that's not a back testable bar type. So okay, let's see. We had a comment here from Michael that looks like a standard candlestick, and yep, we are using the candlestick style because that's, I think a lot of people are familiar in using the candlestick style. So if you don't want to use the candlestick, you can go in here and use the US open, high, low, close style like that, and of course that's kind of hard to see. So let me go back to the candlestick there. So you know, there are other bar styles here that you can use. So, and I think there's this one or two more questions here I'd like to answer. Let me just find them here. So Adam is asking, is this derived from the line break? And of course, yes, it is. You know, this is the back testable line break is the line break, but in a back testable form. And let's see what else we have here. Sean, if you spot any questions, feel free to let me know.
I think that looks about it there, Zach. I think it's best maybe we go back over and we show some demonstrations on how this can be used from a strategy standpoint.
Sure. I guess just one last thing. There's one last question in here saying, TJ is asking, how is this different from the back testable Renko? Well, the Renko and the line break are just totally two different bar calculations. They're two different chart types altogether, so that's really how they're different there. So, okay, well, with that, I'll pass it back over to Sean. Thank you, guys.
Thanks, Zach, for that assistance with demonstrating the technicals on that. So the name of the game is how can we trade with this, right? We have a lot of technical questions, but how do we actually trade with this, right? Because we can use a bar type in a lot of different ways. We can use it based off of reversal patterns. We can use it based off of market structure. And like I said, it's really there to just identify how we read the market data. So the first thing I want to do is I'd like to address the two engulfing patterns, right? Because they're the simplest for me to explain. We'll get those out of the way first so that you guys can understand what they're doing. Now, the first thing I want to point out, let's go to this one first. If we go into the data series section, right, you'll notice that the base period is applied to a minute chart. If I wanted to, I could apply the line break to any one of these base periods. So maybe you don't want to use it based off a minute. Maybe you trade volume or tick, right? Or you're looking at bigger time frames for swing trading. You have the flexibility to go in and adjust that. We had a couple people ask, right, can we switch this to 2 or can we switch this to 5? Yes, you can, which would mean that you would need to break the previous 5 candles. Right now it's set to breaking the previous 3 bars, right? So let me explain this for a second, right? Right, so let's just explain this real quickly so you guys can see this. The line break is the big bar, okay, right? You can see here clearly, you can see the line break. You can also see the line break right here, right there. That's the reversal bar, okay? So let me explain that real quick. And I know Zach just went into this, but I think there's still a couple questions here that I wanted to basically address. Take a look at this previous candle's high point right here, and right here. So basically, if we were to just draw a little white line, the high of this candle was here, the high of this candle was here, and the high of this candle was here. So it'd have to break this, right, in order for us to be able to complete the break of that, right? If it was set to 2, it would only need to be able to break the 2 candles before the bar. So let me just show you this here, guys. If it was set to 3, which it is, this candle breaks this, this, and this one to form the reversal bar. When this candle is set to 3, it breaks this, this, and this candle to form the reversal bar. Do you guys understand that now? A little bit easier to understand the line break itself. It's the reversal candle we're really focused on. It's not all the little teeny candles in between, right? So let's simplify this so you guys can see how it can be used, right? Now, in order for us to use this, we could adjust this to a 2-1. I can go in and do that right now if you'd like. I'll just adjust this to a 2-1 and you'll see it'll change the view a little bit, right? And basically what we're doing here, you can see now it changes the perspective a little bit, right? It's a little bit more noisy. The reason why we use a 3-line break is because it's a little bit cleaner for us to see, right? And so this is basically, you can change the settings to go in here. You could take a look at a 5-1 line break, right? And let's just change it to a 5. Only because we've applied it to the minute charts, Ken, right? And maybe Zach, you can adjust that question here. Ken Roscoff is asking that, right? So you can see here with less market noise, obviously the bigger in fractals we go, the less bars we're going to have because the previous candles have to be broken by the line break bar. Right, so if you think about this, if we have to break the previous candle's high or low point by the last 5 bars, that's going to require a significant shift in market movement, right, from the up and down price action, right? So what I've found, and this is just based off the testing that I've done, is that we've been able to simplify this by looking at the standard 3-1 because this is essentially how this bar type was originally designed around the 3-1 line break. Right, now this could obviously be changed. So where does this bring us to the templates? Okay, so this BloodHound template, it's a master template. And this is basically what comes with the line break bar when you use it. Now Zach and I have put together a bunch of different criteria. And if we go into the logic boards, you'll notice here that we've got an engulfing range, an engulfing body, and a line break pullback. Since we're looking at the engulfing body, I'm going to pull this up. And basically what we're doing is we have an EMA that's basically helping us determine some form of directional bias, right? Now this directional bias can be chosen based off whatever indicators you're looking at. Maybe you're looking at momentum indicators. Maybe you're looking at Keltner channels, or you're looking at a different period EMA, or you're using a different factor, RSI for momentum, or CCI, or any other type of oscillator. You guys have flexibility as a BloodHound user because you have the ability to come in here and build and test whatever you choose. We've kept it simple so that you guys can see the concept around what we've done. Now, the engulfing pattern can be bridged upon so that we can essentially take out the directional bias, and you can see here that we have an engulfing pattern that just appeared over here on the left-hand chart, right? Well, this would be going against the trend of the EMA, right? So that's essentially what that's doing. So all you need to do is take these little building blocks up top and then put that into whatever other system you would look to build with the engulfing body candle. Now, personally, if you would ask my opinion, I would think that the engulfing body template does not provide enough patterns based off what I've seen. So my preference is the engulfing range. Now, the engulfing range operates a little differently because the previous range has to be engulfed by the next candle. Let me just show you this. The engulfing pattern that we're looking at here is if the line break bar creates an engulfing range pattern, right? And you're not, I mean, there's going to be other engulfing patterns in between the line break. We're only really concerned about the reversal bar because in my opinion, the line break candle is the most relevant because it's going to give you the most impact in market structure change. You can see we had a candle here, but the range of that candle was an equal top to the previous candle's range. So that was within the tick, right? Does everybody see that? So that's why we didn't get a pattern set up right here. If we go back and take a look though, historically, and I don't have time applied here, obviously if it's outside of the trading hours, you would look to trade, you know, you could apply session time templates in here, you could block certain time of day and so forth, right? But you can see here, this line break candle, this big reversal bar, broke the previous candle's range by the top and the bottom. Does everybody see that? Now, you can also see here that we're also getting a reversal engulfing pattern here, but this is a range engulfing. Clear setups back to back to back, right? Now, this is clearly just one condition of the beginning of a very good strategy using a reversal pattern. Right? Now, if we go back, you can see here, this was a losing trade, that's fine, right? This one here was a losing trade, that's fine, right? But you can see clearly that we don't expect every setup to be the winner. This is not a full-blown trading system. This is basically the engulfing entry system. You will still need to bring it together with maybe a different EMA, a different momentum indicator, and so forth. But in my opinion, when I take a step back and I look at the chart, isn't it easy to see when the reversal patterns are happening, but I want to know if it's an actual true engulfing pattern. Because if it's taking out the previous candle's range, there has some significant movement based off the high point and the low point of price action. Because if it's taking out the high of price action from the previous bar, but it still continues to trade below the previous candle's range, that's clearly a reversal pattern because it's taking out structure lows while still taking out structure highs. We still want to be able to use this in confluence with directional bias. Does everybody understand that? Hopefully I didn't speak too fast, and hopefully that was clear. Just type a Y in the chat box if you guys can understand the concept around this template. Okay, so with this being said, you can look to implement this on any, it does do yeah, John is saying it does a decent job of showing value as well. Exactly, because it really needs a significant price shift for us to be interested in. James Daly is saying, "You're God." Well, I wouldn't consider myself. I answer to a higher authority, right? But nonetheless, in my opinion, when I took a look at this, when we applied the bar types, I said this has to be created as a template entry because even essentially if you're just looking at these from a reversal pattern, right, you could easily look at just entering off the engulfing patterns and look to take out some money out of the bank, right? Now, this isn't a full-blown system. Let me go in and show you another example of how we can look to trade this, right? Because what really showed to me was Zach and I were actually looking at the pullbacks, right? Because a lot of you guys are actually trend traders, right? Who in here is a trend trader? Anybody in here trading with directional bias in their systems? I would assume 70% of you guys are, right? So with this in mind, we wanted to build a trend pullback strategy. Now, like I said, the focus, yeah, Darren says we're trying, right? The focus here was not to provide you with a scalping system or a high frequency trading system, right? Here's the key, guys. We're looking at a 3-1. You could drop the fractals down to a 1-1 or a 2-1, and you could reduce the amount of time it takes for a setup, right? Or you could also essentially look to increase the number of trades, right? Yeah, John, I am showing you a system right now. I'm going to be showing you backtest for this signal in a second, right? So we wanted to demonstrate a very simple approach to around trend trading. Now, this is a 50 period EMA, right? A 50 period EMA is much stronger than a 20 period EMA, right? And essentially, the reason we wanted to do a 50, not a 20, was because a 50 is going to provide less setups, which is going to show strength of direction upon the setup. You have the ability to go in. Okay, let me just do this for a second. All you need to do is go in and change the period in which we're looking at the close to the 50 period EMA. You could go in and you could change this to a 20 period or a 9 period or an 89 period, whatever you choose to use for your EMA or whatever trending indicator you want to use. Maybe it's a Keltner channel or a Donkian channel or whatever you wanted to pull back to, you could do this. But I wanted to show you something that tests positive, and I wanted to be able to show you on a bar close entry. Now, here's the key, guys. Understanding that it's not about a whole bunch of trade setups. It's about catching setups that have merit. Okay, there's a couple small losers, but look at the time on this. I'm not going to be trading crude oil at this time, right? I'm only going to be trading crude oil when it matters, right? When we have valid opportunities, right? These are really big trades, guys. These are big trades. Okay, now you're going to say, well, why didn't we get a signal here? Most of you guys are going to say, well, why didn't we get a trade signal there? That looks like a clean pullback, right? Zach and I actually created some conditions, okay? And one of the conditions was bar length. And the reason we did this is because sometimes you're going to have news announcements that are going to create a reversal bar in one direction and then a reversal bar in the next direction. So we created a filter that removed that criteria, okay? Now, with that in mind, take a look. We get a signal. You guys have the flexibility to choose how you want to use the templates. We just created stuff based off our experience to remove the noise and remove over trading scenarios, right? Let's close this out and go and take a look at a couple other examples where removing that filter, okay, would have given you more trade opportunities. Take a look at this. Let's go back into the template. I'm going to maximize this down just a bit. And you see this bar length solver? Let's remove it. There's the other entries. So depending on how you choose to use the template, you could have some really killer trades with this trade setups. I mean, in my opinion, these are strong, strong entries. Now, you might have been able to have more entries had you used a tighter EMA, because if we apply, let's just go in here and add another EMA to the chart. Now, let's just go and add EMA, and let's just change it to a 20 period for a second. I'm going to just put this red so you guys can see it. If you guys were using a faster EMA, take a look. You could have been able to take some more advantages of those tighter pullbacks, right? It's really you guys have the difference to be able to adjust how you want to use these trade templates. We just wanted to show you something very clean, as well as something that actually provides a positive test. And the reason I chose crude oil is because most of you guys are trading it. I could have spent a lot of time testing it on the other markets, but I chose crude because, well, let's ask the room here, right? Do you guys trade crude oil? Just type a Y in the chat box, right? And I'm gonna assume there's gonna be a couple that say no, but I'm seeing 80 to 90% yes. This is why I chose crude oil for the example, guys, because it doesn't make sense for me to look at soybeans if none of you guys trade soybeans, right? Does that make sense? Right, so let's go back and take a look at this. Let's take a look at this right here, and there is a setup. This one was a stop, right? But take a look at the times, guys. Most of you guys aren't trading crude at that time, right? Let's go back here and take a look. Look at these trades right here. These are some big trades. Some of you might not be trading crude at these times, but some of you guys might be trading crude at these times, okay, depending on your preference around the time zones that you trade, right? So let's go back and say, well, why should we even consider using this? Well, I wanted to test it, and this is what I did, all right, and I tested it. Now, we're not looking for high-frequency trade setups here, guys. John says, I want to trade crude with this now. Yeah, well, I would too. That's why I built it, right? And that's why I'm looking at it, right? I'm also looking at it on other markets as well. Now, what I did was I did a very straightforward 3-to-1 risk reward, guys, because there's less trades. So I want my trades to count. Yeah, it's a 50 period, Mike. If you wanted to use a 20, you could. So basically what I did was I said, okay, if I'm having less trade setups, I'm going to want my winners to be larger winners because I want to be able to make as much money out of my trades as possible, right? So as a directional system, I want to let my winners run and try and cut the losers short as best as possible. Guys, the stop is 10 ticks, right? Very simple. Yeah, simple. No, it's exponential, Mike. Exponential, EMA. It's a little bit faster than a simple moving average. Yeah. So here's the key, guys. You would think, well, maybe I need such a really, really big stop on this if I'm trading these big reversal candles. The truth is you don't. This is a 10-tick stop with a 30 to 34 tick target. You could look at 30, 28 to 34. The range was 34. I left it at 34 just because that was the test result that gave me the better drawdown, right? The less drawdown, right? And that's really what I'm looking for. I'm really at optimizing profit factor with small drawdown. Okay, so what I did was I tested. I'm not curve fitting over 3 to 4 months, right? I'm test fitting it for 11 months, I believe it was. I didn't have a year of data downloaded on my charts, so I couldn't give you the full year. So I'm going back from June 9th to May 10th today. So this is actually looking till yesterday or Friday. Okay, guys, so what we're looking at here is we're looking at just over 100 trades. So essentially, and I'm looking at 7 in the morning to 2:30 pit close, guys. So I'm actually not taking trades after the pit closes, Merritt, right? And what I did was I took Mondays out of here. Now this could be filtered even more, guys. I believe there was still a losing day in here. I believe Tuesday was still a losing day. I could have reduced it, but it would have took the number of trades down too much, right? So basically what I'm doing is I'm trying to remove the market information that's causing the system to not be effective. Right? One of the things you'll hear Daniel and I talk about is, you know, if you're starting to remove things from your strategy, it needs to remove the amount of losing trades, not the amount of trades that you take. Right, guys? So that's very, very important. So you would say, well, percentage profitability, it's only 35%. Well, as a directional trader, if you're trading with a greater reward to risk, you do not need to have a high win rate to make good money. You just need to be able to have larger winners than your losers, right? Does everybody understand this? Just type a Y in the chat box if you understand the concept of risk versus reward. Very straightforward, right? So take a look at this. My average losing trade is only $300, guys. This is trading 3 contracts. Remember, it's only a 10-tick stop. You could basically drop this down to 2 contracts and you're only risking $200 per trade on a smaller account. Does that make sense, guys? And my average winning trade is $1,000. That's pretty good numbers on a 10-tick stop. Okay, guys, now you're looking here. I'm not expecting to hit 10 trades a day. Remember, I said this is a passive strategy. So you could have this running over in the background on some of your other monitors or maybe on a different workspace while you're trading or building some of your other more active systems. And I can assure you 1 trade, right, profit factor is 1.8 exactly. It's pretty high, Vic, right? Now, here's the key. Okay, the key is the drawdown. Let's go in here and take a look at this. It's not curve fit. I'm not looking at a straight line to the sky, right? I'm not looking to hit the rocket to the moon, guys. I just want a steady grind. I want to grind so that the pullbacks are not steep drawdowns. If they are drawdowns, I want them to be gradually coming down and then big pop up. Gradually coming down and then big pop up, right? So this is very current, guys, right? We're going up to current data. Right now, if I go in here, if I take a look at the most important aspect of this, the drawdown is very, very small, right? The currency, you can see the average drawdown here. Max drawdown is just, let me see here, the max drawdown I believe was $2,200. In my opinion, trading crude oil, that's a challenge to find, guys. That's a challenge to find. Not that it can't be done. Maybe some of you guys have better performing strategies. That's the whole point of using our tools that we provide for traders. But from a free template standpoint, a free strategy, right? That's pretty darn impressive, I'd like to say. Right, so let's go over here to periods. Now take a look at this. Exactly, I'm going to explain to you how I would exit the system, guys. This is an all-in, all-out scenario. Remember, when you backtest a strategy using Ninja, you're forced to be picking the best target and stops or an optimal target and stop so that you have an all-in, all-out scenario. Well, I'm going to show you how I would choose to manage this based off my trading experience, and then you can choose how you guys would choose to manage it based off your preference. You'll see here, I could have taken this out, guys. I could have curve fitted this and taken out Tuesday and said, well, isn't that a losing day? I didn't curve fit it, guys. I didn't cut out times of days and put session solvers in here. This is an all trade scenario. Just we only took out Mondays because Mondays were the only day that, in my opinion, were too slow. Number of trades was low and the drawdown was too high, right? So as you can see here, half hour of the day, clearly we're not trading around lunchtime. And maybe holding into the close is not necessarily the best way you want to trade. Maybe taking exits at 2 o'clock, which is where most of the trades closed out. You can see, remember, this is when NinjaTrader closes trades, is when they mark this down, right? So might not trading right into the close would be also beneficial. Right? You can see that the number of trades at that time was low, so cutting this right out would be a beneficial factor. This is what I like to do when I study metrics, guys. I look at the numbers, I look at the stats, I look at where the system can be improved, and if I take something out of it, is it going to benefit me, right? Now, does everybody have sound, guys? I just want to make sure you guys have sound. Tony's saying you lost sound. Just type a Y if you have sound. I don't want to continue if we don't. No, this was an all-in, all-out, Michael, but what I'd like to do is I'd like to show you how I would manage this, okay? I would like to show you how I would manage these trades, because if we take a look at the graphs here quickly, let's go to weekly net profit. This is current, guys, right? You can see here the weekly losses are much less than the weekly gains, right? If we look at monthly distribution, right? 4 losing months, but small losing months with much larger winning months, right? Not looking for a lot of trades in here, guys, but this is a passive strategy, right? For those of you that are trying to scalp a lot of times, having something like this on the back end, collecting a few extra dollars that has a little less trades, but a higher probability of cleaner setups, something that I would maybe consider, right? Let's take a look here, and let me just see here. I already covered that. Yeah, let's cover that. So that's the end of it. That's basically the example template. Now, what I'd like to do, guys, I'd like to show you today's setup and show you how I would choose to manage these if it was me trading it, okay? Now, remember, if we're using the template, I just want to show you this for a second. What I've done is I've disconnected the bar length solver. You guys have the ability to connect it. It's going to remove some of your signals. The back test, right? Well, George, I would argue the fact that your percentage profitability is what's causing your system to be profitable. Anybody that's been trading for a long time or that knows anything about profitable systems knows that percentage profitability is not the key to your system. Profit factor and drawdown are. Right? I would much rather trade a strategy with 30 to 35, 40% if it's making me a lot more money than trading a 70% win rate that's causing me to lose money. Does everybody understand that? And that's my preference as a trader, right? Because in my opinion, I could have an 80% win rate and have 10 trades in a row that are all winners, but the 2 losers wipe me out, right? That's not a winning system. That's trying to be right, and the market winning in this business is not about being right. It's about making money. I don't need to be right to make money, guys. Right, guys? So let's do this. If we look at this template, I disconnected this to be able to provide you another setup. The back test is with this connected because I was removing a lot of the bigger trades. In my opinion, right? In my opinion, this will provide you a lot more signals. So you will have the ability to turn this on and off. I actually would toy with that because I think that this can be useful and this does not have to be always applied. It's really a preference, right? So let's take this out here for a second and go into today's signals. The back test is at a 3-to-1. Personally, as a day trader, I don't like holding for 3-to-1 because I don't like being in a trade for that much time. Okay, so what I want to do is I would look to basically manage the trade accordingly. The entry, let's assume, is at bar close because we truly want the reversal after the pullback to tell us that we're going to get into the trade. If you have this set up on intrabar setups, you would get the setup in between these two candles as it's coming up into this area. But in my opinion, I'm waiting for the confirmation of the reversal. I want the pullback with confirmation of the market continuation in my direction for the trade. So this is a setup that took place this morning. Okay, let me just show you the entry. And if we're looking at a 10-tick stop, guys, let's see the entries at bar close. So if we're looking at 11, so we're going to go up here to 21. So the stop loss is right here at 21. Let's just do this. Okay, the stop loss here, let's just do 1, 2, 3, 4, 5, 6, 7. That's right there. So there's your risk on the trade, guys. Just like this. Okay. Now, if we're trading with a 3-to-1, let's do this for a second. I just want to show you profit targets at a 1-to-1, a 2-to-1, okay, and then a 3-to-1. Just like that. If we're holding for the back test, so what I'm going to do here is if we're looking at the back test, okay, holding in an all-in, all-out scenario, the exit of the back test is exiting here at the bottom of this leg, right there. The way I like to trade is I like to at least get 2-to-1 on my trade before managing my stop loss, right, on this type of a strategy. So let's assume your risk is right here, guys. After it clears down here, down to the 58.91. What I'd be doing is I like to trail my stop behind the previous candle's range. For those of you that know how I trade, a lot of you guys like to, or at least some of you guys have seen me trade, I'm using the previous candle's price range as my stop loss. And as this candle closes, I'd be squeezing my stop. And as this candle closes, I'd be squeezing my stop. So even if I didn't take a hard exit at 3-to-1, my exit would be right here, guys, because I like to squeeze price out of a market leg. That's how I trade. That's my preference, right? So even if you didn't take a full 3-to-1, this trade alone this morning warranted you close to 30 ticks on that, right? Now the next trade, let's talk about the next setup because there was only 2 trades today on this template, right? On this template, let's do this and let's put the entry. The entry is right here, guys. Okay, and if we do the stop loss, let's do this and we'll do 10 ticks above it. So we're looking at 05 to 15 right there. There's your risk on the table, guys. And if we're looking at the risk reward on this, let's pull this over. There's your risk, guys, with the exception of the 1 tick right there. And if we're looking at a 2-to-1, right? Let's just bring 2 little yellow boxes down here so you guys can see how I would choose to trade this. And this is just my own experience, so I'm sharing it with you. After it clears 2-to-1, what I would do is I would move my stop because the entry, okay, the entry is right here at the bar close of this reversal candle, which is the line break bar. We get the confirmed pullback, we get the reversal, which confirms the pullback is holding, and then we get the move down. So my way of managing this, after it hit 2-to-1, I'd be squeezing my stop down here, and then I would squeeze my stop out here. So after it took up the previous candle's price range, I'm out. No, because I'm not moving my stop loss until it hits 2-to-1, John. So I'm not going to move my stop loss until it hits the 2-to-1 target. Because remember, the back test was showing you a 3-to-1 profit target. But personally, I don't like holding for the huge, huge move. I still like to squeeze out as much as I can in case the market doesn't give me the 3-to-1. So let's assume this was essentially the back test. Today's trade would have been a losing trade if you were just holding for 3-to-1. Personally, these bars give you enough time to be able to see management. You're moving slower, we're moving with the market, and we're not taking every single swing in the market, guys. Because once you start stepping down in small time frames, you're going to get whipsawed in the volatility. Right? It's clear to see these setups, guys. Does everybody see that? Does anybody think they could implement something like this? It's very simple, very straightforward. In fact, sometimes the most simplest approach is the most effective approach. Right? Trading with trend. Exactly. So Mike is saying he likes my 2-to-1 approach to management, right? So just forego the bigger gains to get more wins if this pans out, right? Here's my thoughts on the runner trades. If the market's going to give you 50 ticks, take 50 ticks. But if the market's only going to give you 30 or 20, then take 30 or 20. Don't expect the runner all the time, right? And remember this, guys, there's no room for opinion in the market. Only facts and measurable statistics, right? So I could say that 2-to-1 is better than 3-to-1, or I could say that 1-to-1 has a better odds, or 3-to-1 is more profitable. All of that is my opinion, and the market doesn't care about my opinion. All that I'm really looking at is technicals, right? And I look at technicals because technicals can be measured, right? Now, I didn't have the ability to test this on other markets, guys. So as a transparent trader, I'm just going to say I spent most of my time looking at crude oil, right? Because you guys are trading crude oil mostly. Now, for those of you that are not trading crude oil, I really encourage you guys to apply these templates to the other markets because the patterns are going to be the same. The patterns are going to be the same. 9 o'clock, guys. I got a couple questions. Where's 9 o'clock? 9 o'clock is right here. Right there. At that candle this morning, guys. So that's essentially today's trade. 2 really big trades, right? And you could have taken 40 ticks out of the market on both those trades, right? I have not tested gold, Mike, and I have not tested natural gas, but I truly encourage you guys to do this. And after I show you what we've got in store for you guys, I really don't think you guys are going to have a problem moving forward with this, right? This is Eastern Standard Time, Julie. Eastern Standard Time, right? So let me go back to the PowerPoint, guys, so we can jump right into ending off the event. I wanted to keep things on schedule. I did not want to keep you guys all night, right? Did you guys enjoy those examples? Let me see here. George is asking if I could please answer his question. No problem, George. Let me go back and see it. Let me just see here. Yes, but you're trading 3 contracts. Can you show this backtest trading only 1 contract as a runner? Then we'll be able to, in my opinion, be the judge of success. So first of all, George, let me help you understand. When you run a backtest, okay, it doesn't matter if you trade 1 contract, 2 contracts, or 10 contracts. You're picking an all-in, all-out scenario. We're not backtesting an ATM. The only difference will be the profit and the drawdown of your trade, right? Because essentially, if you're trading with an all-in, all-out scenario, it doesn't matter if you're scaling multiple exits. I'm just showing you how to be able to peel out more moves instead of letting a winning trade become a losing trade. Because this first trade today, okay, would have been a winner based off backtest numbers. The second trade would have been a loser. I'm showing you how to take losing trades and manage them from being winning trades. Does that make sense, George? Because if I apply this on a 1 contract backtest, you're only going to get 1/3 of these numbers because the all-out scenario is still going to be based on the same target factor. Does that make sense, George? Yeah, exactly. So mathematically, 1 contract is going to give you 1/3 of this, 1/3 of the drawdown, 1/3 of all of this. Same amount of trades, just trading with less size, guys. Yeah, Julie, we already answered that question with Zach in here. We'll send out the recording so you guys can take a look at that. Right, guys? So what I'd like to do, guys, I'd like to go back into the actual slides and just carry on with the end of this. So first and foremost, guys, a bar type is a way to look at the market from a different lens. And the only way I'm going to use a bar in my trading, and this is my own experience, is if it can be tested properly. If you can't test it, there's no use in using it, unless you're going to spend the time forward testing it through market replay in large market environments. So the backtest line break bar will allow you to clean the market noise. It's going to allow you to see trends a lot easier. It's backtestable with accuracy because it's been built by programmers that actually know what they're doing with regards to testing systems. And one of the most important things is I wasn't prepared to give it to you guys without freebies. Because as a trader, we all know you guys have a whole bunch of stuff on your computer that you don't use, correct? How many of you guys have bought stuff and you guys have got stuff installed on your computers that nobody uses anymore? or you're just sick and tired of buying stuff just to fill up space inside of your download file, right? Well, if you're going to invest in us, I'm going to at least spend a couple of weeks investing in you guys, right? And I think you guys have seen that more times than not. Daniel and I try our best to give you as much stuff with regards to strategies for free, because if you guys are going to spend the time with us, we're going to try and spend as much time for you guys, all right? So what does this mean? For only $225, we will give you the backtest line break bar, and I'm going to give you everything that we've discussed with all the templates. It's going to come with the strategy template. It's going to come with all three of those logic templates built into it, okay? And this is basically, in my opinion, if you took one of those trades today on crude, you've paid for the bar type, and then it's a risk-free investment, right? So what I'm going to do, guys, I'm going to put the link in here. This is the very first time this has ever been released. It's never hit the market. You guys are the first group of traders that will ever have this template. You guys, the only people that will get this template is those of you that have purchased the SI backtest line break bar. And in my opinion, if you can just trade a pullback entry that's going to warrant you a 1.8 profit factor for $225, that's a no-brainer. Who in here agrees with that? I guess basically I'll wait for you guys to tell me if you guys agree. Kathy says yes right away. Exactly. For $225, the strategy is going to warrant you a 1.8 profit factor. Exactly, guys. I hope you guys will take the time to invest in this product, because Zach and I have actually spent a lot of time doing this for you. And in my opinion, it's one of the most effective ways that I've ever seen a bar type work, especially from a backtest standpoint, right? Yeah, it's completely separate product. There's no discount, guys. This is a bar type. This is essentially a very effective tool. We're giving you 3 strategy templates with it. The trend pullback has been tested, right? The engulfing patterns are essentially going to be templates you can build upon. You would need BloodHound for the templates, Robert, but you do not need BloodHound to trade the bar type. Yeah, so Robert, if you do not own BloodHound, you could use those bars, and you could essentially, now it comes with a pre-built workspace as well as pre-built chart templates, so you don't have to do a thing. The price of the bar type is only $225, Kishan. It's on the slide right in front of you guys. Yeah. Does everybody see that? You can use this strategy on a much larger time frame, Ken. You could use it on a smaller time frame. It's a very simple strategy. We've built a few other filters that can be adjusted, but at the same time, we'd be more than happy to assist in any questions you guys have. Yeah. So Mike, if you do not own BloodHound, that's a separate purchase. I recommend going on our website and taking a look at the different models. Let me see here. Ron says he's going to need 2 more looks to figure it out on Scottish. Well, what I'm going to do, guys, is if you'd like, I could go back and I could take a look at maybe a couple other markets if that's something that you guys would prefer. I don't want to spend too much time in the event. I'm assuming a lot of you guys have places to be, right? And therefore, you guys can take advantage of that. Yeah, Keith, it's just light gray. Yeah. Right, guys. So does everybody see the link in the chat box? Everybody see it? Right, guys? Yeah, we'll be recording this. We are recording this, and we'll send this out right away, guys. So give me a sec here, guys. I'm going to spend some time answering questions here. I'm just going to lifetime license ninja, and I'm also going to do open.
I'll pipe in here too. So the question was asked. This bar type only works on NinjaTrader. It's not for. It doesn't work on any other trading platform. And just to clarify, we had another question come in. In order to run the BloodHound templates that Sean was showing you with the red and green racing stripes, you do need to own the current version of BloodHound in order to run the free templates that Sean's given away. So you don't have to own BloodHound to purchase the bar type. So if you don't own BloodHound and you would like to have the backtestable line break, you can purchase that separately, and that'll be fine.
Okay, so yeah, let me just go through the questions here, guys. Give me a few minutes here to scroll back, take a look at them. Let me see here. Let me see here. Maybe I'll get you guys to mute your mics. Let me see here, guys. Give me a few minutes. Find these templates and the questions. Okay. Okay, so here we go. So I joined late, but may get after watch recording. Yes, we are recording the event. Okay, so Sierra charts, no, it's not. It's only for NinjaTrader, right? I will show a couple setups on the ES and the NASDAQ. Just give me a second, guys. Recording will be available as soon as possible. Yeah, Mike, I'll take a look at GC. Mark, the 50 EMA was the standard for this setup, but you could easily take the setups and put them on a 20 EMA. That question was for Mark Finnerty. Okay, is it okay for NinjaTrader 8? Nothing is ready for NinjaTrader 8. I wouldn't even worry about it. They talked about the beta last week, guys, but it's 6 months out from even developer hands, so they're not even worried about that right now. I know this because I have Ninja 8. I'm beta testing it right now, and there's no need for you to even concern yourself. Once we're supposed to know about it, you guys will all be knowing about it because we have to make our stuff compatible for that, right? Yes, this is the regular price, and this will be the price going forward for the software, right, for this bar type. Well, Rob, essentially, why is this better than a hybrid Renko? It's not that it's better. It's just that it's used in a different way. And if you're a Renko trader and you swear by Renko charts, my job is not to try and tell you you're doing something wrong. My job is to show you that we, as professional traders, we can do things differently and we can yield results in a different way using different tools, right? So that's important to know that, guys. Okay. So and always, we're not here to offend anybody, and we're just here to add value, right? And not try to tell you that what you're doing is wrong. Just if we're doing something better, then potentially look at what we're doing. Let me see here. Thanks, Brian. Glad to have your business. Brian says he just purchased. That's great. Merrill, there is no deal. This is just the price of the bars. The deal is that we're giving you a free trading system with the bar types that, in my opinion, is going to be better than a lot of trading systems built by traders trying to figure it out. Right? 1.8 profit factor with less than a 1% drawdown or 1.3% drawdown is pretty impressive for an intraday trading strategy. Yielding 13 tick profit trade expectancy, including slippage. I'll show you those numbers again, Merrill. Right? Once more quickly, then there's major difference. No problem, Craig. Yeah, Tom Belarus just bought it. Thanks, guys. Not a problem. Mike's already left, Kate. Okay, can you show on the ES? Yeah, I'll take a look at the ES here in a second, guys. Mark Finnerty says, yeah, okay, I am in. This looks great. Yeah, Mark, not a problem. And it's very low cost entry, guys. It's a very inexpensive price for a lot of value, in my opinion, as a trader. This is a spit in the bucket, right? So let me see here. John's asking if I were to pick an exotic bar type to trade Renko versus LineBreak. As a trader, not a person selling products, I'm going to tell you my experience. As a trader, John, hands down LineBreak because it back tests properly. If you're going to use a custom Renko bar, then you need to roll it forward, and it takes a long time. And time is of the essence as an experienced trader, right? We get into this business to limit the amount of time working and more time making money. And if I can test a lot quicker, I'm going to do that, right? Exactly. Yeah.
Keith is asking, are these bars okay for Forex? And yes, you bet, Keith. It's just a different style of chart. That's all. So you could definitely trade this on Forex.
Yeah, Bob Rose says he's on board. Thanks for the research. Not a problem, Bob. Glad to have you. Gian Pieri just says just bought it. Great, right? Steve's got it. Great. Yeah, actually, WJ, was this backtest including slippage? Let's go back and take a look at that real quick. I just want to show you the metrics to this, guys. Let me just show you this. Okay, so this is entering at market with an average trade expectancy of 15.6 ticks. Right, do you guys see this? $156 per trade expectancy. So let's say you took a tongue tied here. If you took a tick of slippage on the entry, right, and you took a tick of slippage on the exit, that's 2 ticks. Let's say you just took an average of 3 ticks for slippage, right, just to give yourself an extra tick of loss, right? So you take away 3 ticks on this, you're still net profit 12 to 13 ticks of, including slippage. And this is including commissions, guys, right? So I already did factor out commissions, right? So that's very, very important. Does everybody understand that? Dennis, it's in the actual chat box, guys. I put the promo link in here. We get a couple of questions. Yeah, John, not a problem. If you, great work, you guys. Guys, as much as you think I'm a marketer and I'm sitting here behind the webinars, I'm involved in this stuff. And if I can give you guys as much stuff as I can for value, the team here is Shark and myself as a trader, Daniel as traders, we're going to do everything we can to help you guys out. Right? Obviously, we ask that you invest your time and your education in our products and services, but we're going to fight hard for your business, and hopefully we've added value in any way we can. Right, guys? So not a problem,
Hey,
John.
Sean.
Really appreciate the kind words.
Sean, can you bring up the Shark Indicators homepage and show people the Purchase Now page? And there's also some additional resources if you'd like to learn more about what a line break bar is and how to use it.
Hey guys, let's do this here. So let's go down here to products. You can go to sharkindicators.com. The SiBacktestLineBreak bar. You're going to click in here. Right? Here's some differences between the SI backtest line break as well as the traditional line break. And then we've got some features here. There's some really great articles that Zach's actually researched to be able to provide you with some more in-depth understanding. Right? If you click on this, it's going to bring you to an article that's basically understanding the price of the 3 line break bars. Right? There's actually 3 articles that or maybe 4 now since I've looked at it. And essentially, you can see here there's some really great research articles on the line break itself, and it will work with a lot of different assets with your trading arsenal, guys. So just knowing this is the bar types and the line breaks as well, guys. So there's some really good research on this stuff here. So this is just here for your guys' interest. And you can always just go to the Buy Now page inside of the website as well. But if you do this, guys, it's an extra step. So I would recommend not doing that. I would actually recommend using the link inside of the chat box. I'm going to post it one last time before we close out the event, because that's the best link that's going to take you to the order form. Right? The order form is going to look like this, guys. And you can see that it comes with the BloodHound templates. So it's much more effective for you guys to look at. John says point figure next, right? No, John, I'm not really interested in that type of bar, but nonetheless. Denise is asking, where can we purchase? Denise, do you see the purchase link in the chat box? Do you see it? We've put in there a couple times, and you've asked where's the purchase link. I'd be more than happy to give it to you. I just want to make sure you can see it. Pullback stats, please. George is asking pullback stats. You're talking about the stats for the actual the system. Is that what you're talking about, George? Right here. So this is the stats of the pullback trend EMA template. Bob is asking, Bob Rose, Zach, if you want to take a look at Bob's saying he's getting an error message on the down low page. So take a look at this, George. You guys see it? Right? Quickly. Nice steady climb. Very slow, very small drawdown. Okay. We're taking a look at a profit factor of 1.8. We're not really concerned about a Sharpe ratio because we're not trading the risk-free return here. We're not looking at bonds and interest rates. 35% profitability, but we're not trying to be right. We're just trying to make money because every losing trade is only 300 and the average winning trade is close to 1,000, right? So the average trade expectancy, Heinz says just orders. I'm a buyer. Vic says I'm a buyer, right? Ernie says, okay, it shows only 2 trades a week. Yeah, but here's the thing, guys. If you're only doing 2 trades a week in the average trade expectancy, okay, yes, think about this. The average winning trade is $1,000, right? Think about this. If the average winning trade is $1,000, and what I've done today, right, let me just show you this. What I've done today is I've showed you guys how an advanced style of management could yield better returns than just an all-in, all-out scenario, right? So let's talk about this. The first setup would have given you a signal based off of 3-to-1 risk reward, which is with the back test. But if you're holding for a 3-to-1 only and you're not looking at managing a trade, who in their right mind is going to let the market drop 30 ticks in profit before at least moving your trailing stop? Right? Think about that, guys. So the reason I'm showing you 2-to-1 is so that you're not holding for the grand slam, but you're squeezing out at least on third base. Does that make sense, guys? So that you don't take these 30 tick gains and your profit target for a 3-to-1 was down here and you're almost there and then you just give it all back. That's not good trading, guys. But the problem with a back test is that you have to pick an all-in, all-out scenario. Of course you can, Ken. You can use an ATM strategy with any of our systems. You could use an ATM strategy. Yeah, very impressive, Mike. Not a problem. Mike, guys, I'm a trader, and if I'm going to try and give you guys tools, I'm going to show you guys something that's going to work, right? So let's do this. Let's do this. Let's pull up a chart of the ES, guys. So let's do this. This is the ES. Right? And this is a 3-1. Maybe the ES is going to work better on a 2-1. I don't know. I've never looked at the ES on this. Let's take a look at the pullback entry, though. Right? So there's the pullback long. There's the pullback short. So this was pre-market. In the overnight session, wouldn't have traded that. We have a big, big trade today on the ES right after lunch. Big, big trade on the ES. You guys see that? Exactly, Mike. It's applicable with swing trading stocks as well, especially on a line break bar. You could put this on bigger time frames, absolutely. That's a monster trade. Yeah, Gary says he's in. That's just the ES. Guys, you guys want to look at any other markets? Which markets you want to look at? You want to look at the NQ? Let's take a look at gold. I'll take a look at TF in a second, guys. I don't have data for natural gas, guys. Let's take a look at gold. Gold didn't give us a setup here, but remember I told you guys have the flexibility of disconnecting the bar length solver. There's your signals. You guys see it? I don't have data downloaded for the 6E, Derek. Sorry about that. So remember, when you buy the bar type, guys, just connect this and disconnect this. It's the bar length solver. It's only used to filter out the really, really big candles sometimes. In my opinion, it's not necessary all the time. I would just look at toying with that. Okay, guys? So let's leave it connected for a second. You can see not a lot of trades on the GC. Let's go back into the template. And let's go in here and actually connect this. Template there, entry, and this is going into close. We're not trading gold at that time. One big trade on gold. Okay, let's go back here. Let's try the FDAX. I might have data for the FDAX. Give me a second. Let's take a look at the TF first, guys. We'll just go in order. And this is just showing you the entry templates. Okay, TF. You see here, that was pre-market data. The TF didn't really move a lot today, guys, but it did at the end here. Take a look at there. There's your entry, pre-market. You guys see that? That's pre-market. Now remember what I talked about 2-to-1 management. I'm going to show you this example on the TF, guys. Let's do this for a second. Let's do this. The entry's here. I need to put the actual crosshairs on so you guys can see it. So the entry's at 1230.1, 10 ticks, so we're looking at 1229.1. Right there. There's 10 ticks, guys. That's on the essentially on crude oil. We're looking at a 10 tick stop. I don't know the best stop for Russell, guys. You guys are gonna have to toy with it, right? I don't know the stop size, but let's assume 10 ticks or even maybe 15 ticks. I would not be trailing my stop until I was up here at this candle, and then I would have squeezed price out to this leg up here. So I'm just seeing how I manage trades. I would have got low ticked on that candle right there. So my exit would have been right here. That's how I would look at that. So let me see here. The bar size filter could be triggered by time of day too, I bet. Yeah, John, you could basically look at that as well. Let me see here. The bar filter is not applied here, right? So the Russell didn't really. Now, guys, you don't have to trade every market. You don't have to trade every market. Manually, John, I manage these manually. You could programmably do that if you looked at that in a different way. Just not at this time. You would have to manually do that. Yeah. Let's take a look at the YM, guys. Let's see if the YM give any something. Let's see the YM. Did YM give you some awesome trades today? Let's see. Yeah, the YM gave you some pretty good trades today, guys. This is pre-market. I'm not usually trading the YM until, I don't know. I look at the market sometimes and I see, personally, I probably wouldn't have taken these trades, guys. It's the volume is too low pre-market, but this trade definitely, big trade in the afternoon, guys, on the YM. Big trade. We're not trying to catch every little noisy move. We're trying to catch the qualified ones. Now the market just opened. John says, I'm a discretionary trader. This stuff blows my mind. Not a problem, John. Let's see here. Somebody wanted the DAX. I'll see if I got data for the DAX. I'd have to take a second. There's a couple big trades on the DAX. You guys are trading the DAX in the pre-market session, I'm assuming. In the Euro Open, boom, there's a trade, boom, there's a trade. 2 big trades on the DAX. Okay, guys, and then we didn't get any other setups. Let's see here. Is this connected? Let's connect that. Yeah, see how that line bar solver removes those setups, the bar length, right, guys? So sometimes it's good to just toy around with it. And let's see, there's another big trade on the DAX here this afternoon, but most of you guys aren't trading the DAX at that time. So there wasn't really anything during the Euro session, or the US session, but really good on the Euro session on the DAX yesterday. Or I guess that would have been last night. All right, guys, let me see here. Anything else? NQ, we looked at DAX, GC, natural gas. I don't have data for natural gas. It's going to take too long. Let's take a look at ZN here. Let's see if bonds gave us anything, WJ. Yeah, bonds gave us a couple. Bonds gave us a couple great setups. Personally, I'm not trading bonds at this time, but definitely trading it pre-market after 9 o'clock. I am. Yeah. So that's a really big trade on bonds, guys. Right, guys? Remember, this is subjective. This is the 3-1. This is the 3-1, guys. Right? So, in essence, you guys are going to have to test it on the other markets. I can't do everything for all you guys. Right? I can't do everything. I try to do a lot, but I can't do everything on all the markets and still do what we need to do on the back end. But I hope you guys can see that's universal over all markets. Now, this is just the pullback entry. You could put the engulfing body or the engulfing range. The engulfing range would have got you in right there pre-market in the morning last night. But who's trading at that time? Right? Not me. I'm not trading at that time. Ernie, because it's not a high frequency system. Ernie, this is a passive strategy. If you're trying to look at 15, 20 trades a week, this is not the template that you're going to do that on. Right? This is it's the passive strategy for bigger trades. Right? So hopefully you guys see the value in that. And remember, that's just on crude oil, Ernie. I only tested it on crude oil, and essentially the only way to know how I was going to do in other markets is to run tests, right? And remember, this template was applied with the bar length solver turned on, right? And as you notice, if we turn the bar length solver on inside the template, you're not going to get a lot of these trades. You see how those trades are not taken in. So Ernie, it's really all relevant to what you test, right? I'm giving you flexibility to take the setups and reduce them, increase them, and so forth. Is everybody okay with that? Guys, I think I've kind of hit the hammer on the head. Hopefully you guys enjoyed the event. Is there any other questions before I close this out? Anybody else need this? It's only $2.25, right? Actually, Jim, it will. I checked it and it does. Yes, it does. Absolutely, it does. In fact, with a high degree of accuracy, Jim. Yeah. Yeah, Jim, you can set alerts with BloodHound on all of this. Yes, you can, Jim. So if you guys have questions, here's our contact information. I know we ran a little bit longer. Normally, I don't like to run more than an hour or an hour and 15 minutes, but I felt like maybe doing a little bit more Q&A would help you guys see the value with all the other market potential, right? Yeah, no, the templates are only used in BloodHound, Rick. BloodHound templates require BloodHound to use it, right? Yeah, Mike, it will. Yeah. Engulfing range, Tom. Engulfing range and the pullback are my 2 favorites. I'm not big on the engulfing body. I just put it in there so that I wasn't restricting you guys. That makes sense? So hopefully you enjoyed the event. I really appreciate you guys being here. Thanks again to Zach for helping us put on the questions here. And yeah, and then exactly, Derek. If you have any questions with installation, licensing, any of that stuff, just send us an email. Keith in our back end, he's a rock star with support tickets. He'll definitely help you guys out, and I'd be more than happy to help you guys move forward with this. So I really look forward to having your business. Really look forward to having you on board with the new product, and really hope you guys. I'd be interested to see if you guys take some winning trades with this stuff. I'd love to hear some testimonials on this stuff, guys. If you guys go out and take a trade, you take a winning trade, it makes up the cost of the bar type. You paid for the bar type in one trade. Right, guys? So thanks, guys. You're great. Not a problem. Really appreciate you guys. The feedback's welcome always. So I appreciate that. So anyways, guys, enjoy the rest of your evening, and best of luck trading tomorrow and for the rest of your week, guys. Look forward to hearing from you guys. Have a great night.